Alright, today we're going to touch on a few different things: psychology, footprint, trading breakouts, gold, the Fed, and general performance over the course of a month. So let's start off from a performance perspective. And this brings me on to the psychology aspect. Something that's really important as a trader is to never be satisfied and never to be able to say, do you know what, that's enough for today. And this is really highlighted when you look at the performance from a group of our traders since ECB. Performance grew steadily throughout the month based on various different events. I've got those listed along the way. But the best trade of the month, the most profitable day of last month, came pretty much all in about the last hour of the month. And this was on a gold breakout trade. And that's the psychological aspect of it. That ability to go, do you know what? If the opportunity's there could be one more great trade this month. And that makes a huge difference over time. If you want to understand more about how you decide what a trade is, how you decide how to play a breakout, click on the link, come and join a webinar. I'll show you another couple of different breakout types of trade. But what we're going to go and have a look at is this gold one. And we're going to go and have a look at what made it good and how you can use footprint, not as the market's moving, but use the footprint to pinpoint where you think the trade's going to happen. And when I say where it's going to happen, I mean where your entry to the trade's going to happen by understanding what's happened previously. So let's start there. Let's go and have a quick look at the footprint prior to this breakout. So here we go. Right, so this breakout trade, what we're looking for is a break higher in gold above 2480, or it's 2480.6 was the actual level. And then the reason for me saying 2480 is what's happened around that area. If you look at the red box, what the red box shows is where there's actually been some volume done. This is every time we get up towards that 80.6 zone, the market is actually getting stuck at 80. If you look at each of the times it's come out of the box, there's very, very little traded. These are quick flashes of volume where somebody has tried to buy, to break the top of the box, to get that move to keep going. And every time it's got whacked back. So what this tells you, and this is where I think footprint's really, really valuable. What this tells you for the future is that actually the high of the day is not the place you want to try and get in. It's actually on a break out of that execution zone, the sort of 75.5 to 80 area. Once you're out of that, now you can be quite confident as long as it comes out in a steadier fashion to previous. That's key. It's about understanding what happened previous compared to what's going on now. And as long as it's different, the trade is on. So let's go and actually have a look at the trade itself. Now I've said 75.5 to 80 is your key execution zone. The reason we care about this, if you bring in a slightly longer term chart, let's go and have a look here at gold. What you can see on that chart is at 2480, you've got a recent high from about a week prior. Once above 2480, there is very little to get into the way of you moving up towards 2490.8, 2496.1, and then potentially as far as 2503.2. The problem with this day, of course, is that time ran out for the market to actually get to the 2503.2. But we'll show you a little bit of how the trade actually plays out. Okay, what we're going to go and have a look at then is how exactly this breakout plays out. Remember, I said 79.5 to 80 is the area that you're really focusing on. This is where you need the market to get out above 80 and crucially not do this in a flick up and drop back, but actually start to trade above 80. So 80 can actually be your area of execution rather than trying to buy the high at 81.4, which would be the kind of traditional way that you would play a breakout. So here we go, market looking relatively stable. And this is as we're starting once again just to rotate up towards that level at 80.6. So we're looking here, what happens when we get to 80? We've not suddenly jumped over 80. That's helpful to see. So in not seeing that quick jump, you can have a go at entering the trade. Now this has been entered quite small, just one to start with here. waiting to see what exactly happens on the break. The advantage of being in here is that if you're long at the point of the break, you're now in a great position to add on, because even if you add beyond the break, your average price is still going to be lower than the previous high, and so therefore you can have a stop there. There we go, 81.4 trades. Not a great deal of movement on that. It's not too quick beyond it, but we're starting to tick higher. Now you're starting to see a little bit more pace. What we want to see now is the market able to actually stay up. So attempting to buy more now. You've seen this quick flash up, and rather than dropping back instantly back below the previous high, as it's done in previous examples, see the footprint we talked about earlier, we're staying up. So now you can have that passive order at 82.2. This is using the price ladder to get in. There's no level there that I'm looking at there. It's just using the price ladder. Remember, the previous high, I should say, was 81.4. So as long as we're staying above that, this is all looking good. You're actually into that small consolidation phase that you see on the chart after that initial breakup in the middle of the chart around about that 80 area. So this is now the consolidation phase. You're looking to use that recent pullback again as another area to try and add. We've seen an entry at 82.2, and now we're looking to try and enter passively at 81.9. From there, we've already got the target set. So one of the key jobs as a trader is being able to go, okay, my first part of this is, can I get in? Can I get my positions on where I want them? And after that, then it just comes down to, where do you think this is going? Unless there's anything to tell you this is not going to 90.8 to 96.1, there is no reason to get out of this trade. So that's the bit that you're going to have to be mentally prepping at this stage. If you can get filled on that 81.9, you're going to carry this for round about the best part of another 100 to 150 plus ticks. That's what we're aiming for on this trade at this point in time. So you're seeing the market still jumping around. The more time it spends up above 82, the better, because this is showing a willingness to trade at these higher prices. So we've got filled now. What we're going to do is we'll move forward and go and look at the first target, that 90.8. You're not going to be looking to reduce too much here either. You just want to get one out. Just, you banked something like the first target. There you go. Quick jump to within 6 ticks of the target. This is where you don't want to be too specific. It jumped towards the target and now has started to pull back. That jump is essentially a little stop going off. Now, when a stop goes off, you don't expect the market to just continue and continue and continue. Instead, it's likely to take a period of time of settling down, which is what you're starting to see at this point now. So take something off and don't be too precious about it. Giving up perhaps 10 ticks here, but it's better than waiting and waiting for this possibly to be the high of the day. You don't know that at the time. So you take it out around about 10 ticks lower. What you're interested in here though as well, bearing in mind that 96.1 is still a significant target, is to start thinking, well, I've just banked something. We've got the pullback, which is what you'd expect to see. You'd expect the market to sort of take a little bit of a breather after that quick jump. So now the attempt is, can I get more, or can I get back into the trade? You're seeing here that it keeps stabilizing around about 2487.2. That's what gives you your second entry point. So you can get back in. So essentially the size reduced, and then you've added it back in around about 25 ticks lower than when you first got into the trade. This gives you the scope to go further. Okay, so this is the final bit. We're going to see 96 trade. What you've already got here as we come into this part of the video is that we've got a stop below that area where there's very, very little volume traded around about 93, 94. Got the offer at 96, that's on the level or a tick below. I always think it's worth going one tick below the level. 96 trades, little flick up. Don't sit there going, oh, I could have got 5 more ticks. You weren't aiming for 5 more ticks, you were aiming for the level at 96.1. So when that happens, you should be pleased with that. You got exactly what you wanted, you're out. So now down to 2. The issue you're facing now, as I said, this was right at the end of the month. We're running out of time on the day. So the fact that this is very much straight line, you're at the peak of the chart now. The fact that it's very much straight line means that you probably want to be considering exiting, or if not considering exiting, not being willing to give too much back to stay in the trade here. Hence the stop down at 93.4. And if we don't then start to see progression beyond 96, this is where you've got to start asking yourself, should I really still be in the trade? And this isn't about trying to snatch profit. It's about asking yourself, do we actually have enough time left in the day to get to where I think we're going to get to without a significant consolidation? And with that consolidation, that's going to get you to the end of the day. So 96.1 becomes a stronger level based on the time that you've got left within the day. You start seeing now the market once again rotating back, holding around 95. 95 has been the point that it's been holding so far. So the cursor hovering to exit if we go below 95, and then the final stop can be left so that you can give it the chance to go for the rest of the day. But if it starts to drop back down towards 93.4, then you are going to be out of this one. So starting to see again trades down towards that sort of 95 area. Out of that of one, we've got one left now. This is a case of let that one go, see if it can continue throughout the rest of the day. But if it doesn't, you're still out at 93.4. Remember, some of your best trades can come in the last minute of the day, the last hour of the month. Don't give up just because you're having a good day. If there's an opportunity there to be taken, take it and keep on taking those opportunities. You don't know where your best chance of the day, week or month is ever going to lie. I'll leave you there. Last reminder, if you do want to come and see more of this type of stuff, click the link, click subscribe, and we'll see you all very soon. Take care.